Michael Burry was made famous by The Big Short, and he has correctly called every last major stock market crash. He successfully shorted the dot-com bubble in the early 2000s. He famously predicted and profited from the subprime mortgage crash that kickstarted the Great Recession. And more recently, he has called the latest downturn in tech stocks, warning of an imminent crash in tech back during the peak in November. And after the tech market did crash, with many stocks down as much as 40, 50, or even 60% since November, Burry tweeted recently under his Cassandra username on Twitter, "At least I tried." But as dramatic as that sounds, there may be even more to come. Burry has recently warned that the real crash hasn't even happened yet, hinting that the decline in tech is only the beginning and the entire economy could crash like it did in the 2008 housing bubble.
Charles, you sat down moments ago before we started. We're in trouble.
We are in a lot of trouble. And Larry laid it out pretty good because, you know, the experts, everyone kind of thought maybe we'd have peak inflation in December. They say, well, January, February, March, April, May. And it's just persistent. It just won't go away. They created a monster. They created a beast. And it's hard to...
Who created a beast?
It's a 1-2 punch. I mean, listen, the Federal Reserve pumped a lot of money into our economy. But that money doesn't really get into regular folks' hands, you know, like it helps mostly corporations. The 1.9 trillion, paying people twice as much money to stay at home than to go to work, the STEMI checks, all of that created an environment where we just went out and we spent the hell out of it, and we created these problems.
I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years. And that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
You said earlier this week that we were in the calm before the storm. That was earlier this week. Is this the storm?
It is, Stuart. And what this confirms is the Fed is going to have to force a recession to get inflation down. This is what we've been warning about. True. This is why we have not been fully invested all year. And investors need to take this serious. Trying to pick a bottom in this type of environment is dangerous, and I don't think we're anywhere close to a bottom. So they need to take these opportunities to protect their hard-earned capital before it gets a lot worse.
Why do you think we're nowhere near the bottom?
Well, Stuart, if you think about all this money that went in the system over the last 2 years, created, in my opinion, one of the largest bubbles of our lifetime. And now they have to unwind the balance sheet, which means these bubbles are going to be popping one by one, and it's already happening. It happened in crypto first. It's down 50%. NASDAQ's down over 30 from its highs. and you're going to start seeing the larger cap plays do that. This market has to reset.
Ladies and gentlemen, the markets are finally coming to realize that a recession is not coming. We're already in a recession, and the markets are now starting to price in the possibility of a depression. We're in a complete liquidity crisis. And people, if you haven't been paying attention, it is definitely time to start paying attention right now. Because like I've been warning, this recession is going to be one of the most painful we have ever felt. And if you don't act now, you will be left behind and it'll be far, far too late to prepare a month or 2 months from now. Well, everyone, the house of cards is finally starting to collapse. Look at this, big crypto lender Celsius freezes all account withdrawals. And if you think Celsius is going to be the only platform doing this, I think we're going to see many, many more cryptocurrency platforms go under. Because you know why? We've never had a cryptocurrency bear market when the economy has also been in a recession, and a real recession, not like 2020 when that was an artificial recession because they just locked down the country and then they printed heaps of money and we had this V-shaped recovery. I'm talking about a real recession, and one that doesn't recover quickly. Because people, we've just got some new critical data that shows us we are already in a recession, and this is the worst ever data we've ever seen. This is not me exaggerating. Let's have a look at this. Listen to this, people. US consumer sentiment slumped to a record low on rampant inflation. And people, these records go back to 1980. So this US consumer sentiment, it was meant to come in at 58. Guess what? It had a massive mammoth miss. It came in at 50. This is the lowest consumer sentiment we've ever seen since records began. This is worse than 2008, worse than the 2000 dot-com bubble, worse than the 90s recession. And you know what's really baffling me? The central bankers and the bankers and, you know, the governments, the politicians, they're all saying the consumer is strong. The consumer has never been stronger. The economy is strong. It's never been stronger. Best economy ever. I don't know what they're smoking, people. They are completely delusional. Or maybe they're just hanging around their $1 million friends and they've seen their asset prices boom over the past year, which now they're going to crash. And, you know, they're making millions of dollars and they're getting big pay rises. So maybe for them, things have never been better. And maybe for them, their balance sheets have never been better. But for the middle class, there is no middle class anymore. They are being completely wiped out by high groceries, high fuel, high rent, and with this new CPI that is the highest since the 1980s, guess what? What did they have to do in the 80s to get inflation down? They had to lift interest rates up to 18%. So if we've got the highest inflation since the 80s, what do you think the central bankers are going to have to do to get it under control?
What do you see happening in the markets right now? The big question is, are we going to avoid a recession or not?
Yeah, so the short answer is we're in for some more trouble. We got two problems. The first is oil prices. Seem to still want to go higher. At 140, they're a double year over year. That's the signal of a recession coming. It always happens. When oil doubles in a year, you get a recession in the next 12 months. So that's the thing to worry about. My other concern is earnings expectations are way too high for the back half of the year. We've been doing $54 a share in S&P EPS every quarter for the last 4 quarters. The street's at $60 and $61 a share in the back half of the year. Those numbers have to come down. They're just irrationally high. And the market understands all that. The market's discounting those already. But until we see earnings cuts and continued growth and oil prices come in, I think we're in for more trouble.
John, will this only get worse for the American people?
It will get worse, which is very, very sad. It doesn't have to happen. As I said before last week, I said it last week, a recession does not have to happen. What the obsession that President Biden has with not turning on the spigots in North America, in Canada, Alaska, and let America, North America, we have 100 years worth of oil. Let them open up the spigots and the price of crude oil will come back down to 55, 60, maybe 65, half. Nobody can understand, all the people I talk to, nobody can understand why this obsession with North America. He wants to fly to Saudi Arabia and beg the Saudi Arabians to give us another 500,000 barrels at $120 a barrel. Does that make any sense at all? It makes no sense. And what's going to happen, he wants to force He wants to force the, and I disagree with our own economists, that our own friends, that they raise the interest rates by the Fed, because what's going to happen? Instead of bringing down the price of oil and controlling recession, increase the price of interest rates, and guess what? It'll wipe out the real estate industry. It'll wipe out everything else in America. Somebody is on a path to try to destruct America, and somebody has to say, guys, enough is enough. I hope we have enough common sense Democratic senators to say enough is enough. Why are we destroying America? You know what the cost has been to the American people because of the rising gas prices, the cost of the rising food prices? It's going to go even higher with $120 oil. It's going to go even higher. I mean, I am begging.
John, especially with...
I'll finish my sentence. I'm begging the White House. I am begging President Biden. Enough is enough. I'm begging the Democratic senators. Enough is enough. Turn on the spigots in North America. Don't go and beg Iran for crude oil for $120, make them richer. Don't beg Saudi Arabia for crude oil. Don't beg Venezuela for crude oil. We have it. Nobody can understand it.
I agree with you. Nobody can understand it. Not even nobody in America can understand it. People who are suffering and whose standard of living is collapsed because of just the cost of fuel. Just how insidious inflation is, just what it's like, particularly with diesel, at every day new all-time highs.
70% of all transportation to grocery stores in the whole country is made by truck, and they use diesel fuel. And also our factories that make the food, that process the food, is diesel fuel. The price of diesel fuel went double, and it's going to go even higher. So what does that mean? The food price is going to go even higher unless we grab control. And forget about, it's not the problem of the food companies. It all goes back to the rising prices of oil, crude oil, and what's happening in America today. And we're transferring our wealth in America to foreign countries. That's what we're doing.
And John, it started the first day that Joe Biden took office, and we all talked about it, that by crushing our energy sector, you hand our power and our prosperity to nations that hate us. And that's exactly what has gone on, and made working Americans poor in the process. Final word.
It's just mind-boggling, mind-boggling. If foreign nations elected Joe Biden, they couldn't have done a better job.
All right, ladies and gentlemen, hyperinflation is coming to the United States of America. Those are the words of one of the most powerful people on this planet, Jack Dorsey, the founder and billionaire creator of Twitter. In fact, he's selling Twitter now to Elon Musk if and when that deal goes through, and I think it will. And he warned just last year, I want to reread this to you because I believe this is happening now, that hyperinflation, I'm paraphrasing a bit, will happen very, very soon in the United States of America. And what that means by the broad-based definition of hyperinflation is that we're going to have 50+% month-over-month gains. But really what that means is losses of the paper value of the U.S. fiat dollar currency. Now, of course, we've seen the worst inflation prints. I would argue we're already seeing this, hyperinflationary prints, as a result of all the policies that we've experienced in the last couple of years. We just got a horrible number. Wall Street crashed down like 800 points on Friday. It's the worst inflation report we've seen in 40, 50 years. Oil, fuel, gas up over 100%. We're seeing this across all asset classes. Jack Dorsey, who's also calling for universal basic income and UBI for Americans, has this to say about the coming hyperinflationary event in what once was arguably the most powerful country in the world, but appears to be turning into the Weimar Republic or Zimbabwe, or what we've seen in Argentina in the past historically when their nation state failed. He says this, the Twitter and Square CEO, Jack Dorsey, says hyperinflation will happen soon in the US and the world. So he says this is going to happen not just in the United States, but the world. Now keep this in mind, when we had the stagflationary event of the 1970s, I believe interest rates, like the Fed funds rate was at, like, if I remember correctly, I took a screenshot of this, 20%. Yeah, that's correct. So when I was born in 1981, the interest rates in the United States were 20%. We're not even above 1 in the United States, entering the hyperinflationary, what they're calling a stagflationary collapse. The federal debt, when I was born in 1981, was only $980 billion. It is $30 trillion today. So here's what I want you to do. Profit from what you know is coming. Profit from the upcoming depression, not a recession. Get in now, okay? Learn how to pivot, leverage, and profit like these same people are doing, like the billionaires are doing, buying all the real assets, buying all the real estate, buying all the crypto, buying all the Bitcoin.